If you just found out an IRS revenue officer has been assigned to your tax case, stop. Before you call him back, before you fill out any paperwork, and absolutely before you let him into your home, watch this video first. What you do in the next 48 hours can either resolve it or make it substantially worse. Revenue officers are not assigned to everyone. The IRS has automated systems, letters, notices, even automated levies that handle most collection cases. But when those fail, or when the debt is large enough, complex enough, or involves unpaid payroll taxes, the IRS sends a human being. That human being is a revenue officer. If one has been assigned to you, you have a serious IRS problem. A revenue agent audits your tax return. They examine your income, your deductions, your records. They're looking for mistakes or unreported income. An audit is a revenue agent's job. A revenue officer collects money. They're not reviewing your return. They already know what you owe, and they're there to collect the money. Now, what can a revenue officer actually do? Well, they can do quite a lot of stuff, and I'm not going to minimize it. They can levy your bank accounts. That means your bank freezes your funds and sends them directly to the IRS. No advance warning required after the initial notice. They can garnish your wages. If you're employed, they can contact your employer and direct a portion of every paycheck to the IRS. Revenue officers are not law enforcement, and let me say that clearly. They carry a badge-style credential, technically to an HSPD 12 card and a pocket commission, but they have zero arrest authority. They cannot handcuff you. They cannot detain you. If an IRS revenue officer has been assigned to your case, one of the first things you'll receive is IRS letter 725-B, the notice of appointment. This letter tells you an officer has been assigned, gives you their contact information, and typically includes a deadline to respond. Here's where a lot of taxpayers make their single biggest mistake. The revenue officer will ask you to complete Form 433A. That's for individuals, or 433B for businesses. These are collection information statements and a detailed picture of your income, expenses, assets, liabilities, and ability to pay. Trust fund recovery penalties. This is where revenue officer cases go from serious to totally devastating. When your business fails to pay payroll taxes, the employee income tax, and FICA that gets withheld from paychecks, the IRS can hold responsible individuals personally liable for 100% of those unpaid taxes. Not just the business, it's assessed to you personally. Your rights and what to do now. You have the right to representation. The moment a revenue officer contacts you by phone, by mail, or in person, you can tell them, I am represented by a tax attorney, preferably me. Please direct all communications to my representative, write down their name, badge number, and contact information, and then call your attorney.